financial centers of the world.
Very big fall indeed, and actually
the biggest month-over-month increase in September. Get this.
What's going on with inflation right now, with growth and with the market?
Unless you drop 20%, then you hold trading for the rest of the day. I know it's a little convoluted.
Okay, so that title was a bit clickbait, but I'm going to tell you why this might be one of the most valuable videos you watch for a long time about long-term wealth, and why you need to stick around to hear the rest. I'm going to tell you why, if you want to be a good investor, why you need to learn to ignore these types of noise. And I'm going to tell you about the mindset you need to create and work on to be someone who builds solid long-term wealth. I'm going to tell you why it pays to be an optimist. But the first thing I'm going to do is introduce you to these people. You might have heard them before. They sound the same as pretty much everyone in finance, and they're going to provide you some market commentary. Here we go.
The earnings granularity is important in terms of what is happening with single stocks, but by and large...
Senate elections in Georgia on January 5.
I got a little bit of a different take. If you look at core inflation levels, you could take out lumber, you could take out energy.
Did that sound impressive? How about useful? Well, it shouldn't have. It's just pointless detail, masquerading as useful information. It's not that any of it was inaccurate, or the people aren't very intelligent saying it. It's just for the average investor, spending too long thinking about these things is almost certainly going to lead to worse outcomes or behaviour. And the whole finance industry and the media industry sort of needs you to buy into this stuff. It drives one thing: noise missold as value. So let's talk about the conflict. The first thing to explain is titles such as this video, are the same thing that the conventional media uses. They're trying to trigger your fight or flight response. You know, it's a surefire way of getting your attention. Attention is the currency of the media news channels, and media channels with no viewers has no value. The problem is here is that there's almost a direct conflict of interest with this and your aims. Their interests do not align with yours. They're here to grab your attention, but it's totally irrelevant to what you need. It gets far more views if you have a news channel which says this.
Down by 4-5%. We're down over...
I think these numbers are very disturbing. People have been cherry picking.
Compared to, well, I don't know, an economist or market commentator who would say, well, actually, all financial history shows that it's more important to focus on the long-term result and be very positive on that, as opposed to all the noise in between. Simply put, those who shock win. So let's just talk about, why is pessimism so interesting? The thing with pessimism is that it is intriguing. If someone's a pessimist, it kind of feels like they know something we don't. And in a world of uncertain investments and market movements, there is always something extra to know. And all of our brains are set up to focus on the risk more than reward. This is a basic principle behind loss aversion, which is a survival mechanism at the end of the day. If you think about it for our ancestors, if we assumed that the movement in the bushes was always the wind instead of it perhaps being a lion, then the one time we got that wrong, well, we wouldn't be around for very long. The problem is that that behaviour doesn't work very well for our habits for building wealth. But this is why it's really important to understand what risks are important to you and how it fits into your long-term plan. Let's be honest, this shock factor is no more present than on what you're watching here on YouTube. Some great voices, but let's be honest, a lot of ill-informed ones. So the first thing you need to do is just be aware of the tricks and why they're effective. So let's just talk about the problem with the short term. The problem with this is it focuses on right now. And our understanding of market going up and down over the short term is pretty much zero. But if we used history as our guide, as it's the only guide we have, that risk of the market individual up and down on a day-to-day, month-to-month basis, that heavily reduces over a longer time frame. Here's the data, I mentioned this in some other video. If you're worried about investing because the market's all-time high, well, that's not a good indicator of future returns at all. If you take the data from the S&P from the 1926 to 2018, they found that the look-ahead returns were much higher when the market had surpassed an all-time high compared to a decline. And the problem is there's a huge risk in jumping in and out. If you invested from 1980 to 2020 in the S&P 500, if you missed no days, you'd have 952,000 at the end. If you missed the best 10, you'd have 425. And if you missed the best 50, you'd only have $68,000, which is pretty shocking, really. The truth is, up to this point, losing money on a well-diversified global mix of equities is something that's only been able to achieve by human error and behavioural biases or lack of adequate time horizon. We can't guarantee the future, but the past and the reasons behind what happened in the past is the best guide we have, and it shows why it is important to be the rational optimist. So what accessing a diversified mix of stocks lets you do is it lets you tap into future human ingenuity. We don't know who's going to be the next Amazon or Google, but if you buy into the market, the idea is that you'll have some winners, some losers, but the forward push of businesses being successful over time. If you want to understand why I'm so optimistic about the market being positive over the long term, have a look at this. This is a list of patent applications, and see how it increases over time. If you think about what this represents, each one of these is someone who believes they can add something to the world. They can perhaps create a business, or they want to protect an idea. When you see something like this, do you truly believe that businesses of the world now, but also going forward, are going to fail to innovate and fail to be profitable going forward? If you think about the developments of the last 20 years and what we've seen, watching me right now, perhaps on your phone, would have seemed really hard to imagine. And I'm sure looking forward in the next 20 years, we'll probably think the same thing. Capitalism is far, and I mean far from perfect. But what it does do is it allows us to tap into the mind and resources of some of the best leaders and companies in the world. I think my job as an advisor is to make sure I keep my clients having this positive mindset. That isn't some weird selling technique, it's very logical. If you look back through all financial history, we've seen that a global group of stocks has always recovered. The people who have lost money investing like that have done it due to lack of discipline or time horizon. Equities are the only real asset class that take their profits, they can reinvest them, and they can go again. This creates the ability for these assets to self-compound, as these profits can be reinvested to sell more, build more, and to innovate. When you see the figures on your investment app or on paper, it may look abstract, but you need to reframe that. This is the same stuff you interact with each day and every day. It's the company you get your coffee from, the phone you're flicking through, or perhaps the place you go shopping to. The reason I'm making this video is that I think it's not only essential to be an optimist with these things to be a good investor, because if you have a pessimist mindset, you will inevitably buy into the interpretation of this time it's different, when there's a correction or when there's a problem in the world, and you can slip into the issue of trading instead of long-term investing. So where I'm going with this is the same place that I've been before. One of the most valuable things you can take from this or a financial planner is not to buy into the day-to-day market movements. If you can develop your investing behavior, you have a far better chance of succeeding. To know what's right for you obviously would take advice specific to you, but it's fair to say watching videos claiming to know when the market crashes isn't expected to be helpful. They are guesses that are normally wrong, but sometimes even a broken clock is right twice a day. Focus on your mindset to become a great investor and understand why it pays to be an optimist.